And the pandemic has wreaked havoc not just on humanity but has shattered many world-class economies as well. And the economies that are the worst hit are those that are oil-driven. The biggest oil exporter of the world, Saudi Arabia's foreign exchange reserves are depleting. That too at the fastest rate in at least 20 years. The country's Forex reserves fell to its lowest in 9 years due to the novel coronavirus. Remember, oil prices have plummeted to historic lows, leaving a dent on the Forex reserves of Saudi Arabia, as most of the revenue came in from the export of oil. The Gulf nation's net foreign assets fell by $27 billion to $464 billion in the month of March, the lowest since the year 2011, and it slipped into a $9 billion budget deficit in its first quarter. This sharp fall in reserves has ended up slowing down the pace and the scale of sweeping economic reforms carried out by the present Crown Prince Mohammed bin Salman. But Saudi Arabia has a plan to revive its economy to deal with the outbreak. Finance Minister Mohammed Al-Jadaan said that Saudi Arabia, instead of drawing down more from its reserves, would rather increase its borrowing. He said that Saudi would not draw more than $32 billion from its reserves this year, but would borrow nearly $60 billion to contain the widening deficit. Saudi Arabia has already borrowed $19 billion from local and international investors this year. It's also important to note here that to keep up with the lesser demand for oil in the international market, the Organization of Petroleum Exporting Countries, or OPEC, and Russia have agreed to cut oil output by almost 10 million barrels per day, which translates to 10% of global oil production in the month of May and June. Saudi Arabia has registered more than 20,000 coronavirus cases and over 150 deaths.